Relief for crippling group health plan premiums. Hi, I'm Kevin Knaus with InsureMeKevin.com, and the IRS has revisited some of the rules surrounding the Affordable Care Act and reinterpreted them. And now, beginning in 2023, some family members that are offered unaffordable employer group coverage can go to Covered California and receive the subsidies. But it's going to take a little bit of work on the family's part to make sure that they are eligible. So prior to this, before the rule was reinterpreted, an employee who was offered employer group coverage and that employer group coverage was considered affordable for the employee, any spouse and dependents that were also offered coverage were ineligible for the subsidies through Covered California. This was commonly referred to as the family glitch, but it was much more impactful than just a glitch for these families. Now, the revisited rule states that if the total family insurance premiums through the group plan are considered unaffordable, the family, spouse and dependents, possibly the employee, can go to Covered California and receive the subsidies. But we need to do a little bit of work and research to make sure that is actually the case. So first, I kind of put together a flow chart of how all of this works. One of the first things that has to be determined is if the coverage offered by the employer meets minimum essential coverage. Now, most group plans in California are going to meet that test. If it does, then you can proceed. And first, you kind of look at the employee contribution, and if the employee's contribution to their health plan, because remember, the employer is making a contribution on behalf of the employee, so they're not paying the full rate. If that contribution compared to the household income is less than 9.12% of the household income, then the employee is ineligible for any subsidy assistance through Covered California. If it's greater than 9.12%, then they are eligible. In general, from what I have seen, because of the employer contribution, the employee health insurance, what they must contribute, is generally affordable. But then we look at the family, and it's just not the spouse and dependents, it's everyone. It's the employee's cost for health insurance through the group plan, spouse and dependents. And if that total premium for the group health insurance is greater than 9.12% of the household income, then those spouse and dependents can go to Covered California and possibly the employee and get the subsidies through Covered California. Now that 9.12% affordability percentage, that is set by the IRS and will change every year. So you have to kind of investigate that every year to see where it's changed and to redo the calculations. So in one particular sample, it may look something like this. We have a household of four: Corey, Pat, Bobby, and Catlin. And Corey is employed and offered group health insurance. The employer is making a 50% contribution to reduce Corey's health insurance premiums. They have gone through, and the estimated household income is $80,000. So just for Corey, just the employee, because of the employer contribution, Corey's percentage of the household income is 3.75%. That is considered affordable, and Corey is ineligible for the subsidies through Covered California. But when we take all of those health insurance premiums and compare them to the household income, that equals 18.93%, and that's considered unaffordable. So Pat, Bobby, and Catlin can go to Covered California and get the subsidies. So that's kind of how it works, but here are some steps you really need to keep in mind. First, does the employer group meet minimum essential coverage? And that is usually outlined in the summary of benefits that should be sent to the employee for the coverage. And again, usually in California, most group plans will meet the minimum essential coverage rule. Then you need to determine the lowest cost health insurance premium rates for each family member. And this can be tricky, and it may take some work, because generally a group plan has many different plans that are offered. The one that you are in might be a silver plan. That may not be the lowest cost one. You have to find the lowest cost, which is usually going to be a bronze. It could be a bronze high deductible health plan. And those are the rates you need to get your hands on. And there are rate sheets, and hopefully the employer or the HR department will be able to get them for you. Next, you need to determine the estimated household income, which for Covered California is the modified adjusted gross income. It is the adjusted gross income, the AGI, from the federal 1040 tax form, modified by the addition of Social Security retirement benefits, Social Security disability income, tax-exempt interest, and foreign earned income. Now, many people may not have those three issues, those three income streams, so that's not a problem. But all of that needs to go in there. So there may be someone who is collecting Social Security retirement benefits, so that needs to be put into the income estimate. And then you put all that together and run the numbers. Now, Covered California has put together some tools to help people do this. The first one is an employer-sponsored coverage worksheet that you can download and hand to your employer. Please fill this out. Like they're really going to take the time to do that, but at least it's a start to gather some of the information. And in particular, it is getting to that lowest cost health plan for each family member. And each family member may not be enrolled in the employer plan because it was too expensive, but you need to get those numbers. So it will take a little bit of work. Another thing that Covered California has put together is a calculator, affordability calculator. And you can go to Covered California, and it's a 4-step process where you put in your household income, you put in what you are expected to pay for the health insurance premiums for that lowest cost employer group plan for each family member, and go through that, and then it will tell you what is affordable. In this particular situation, when I ran some numbers, the employee-only coverage was considered affordable because it was only 6% of the estimated household income. So the employee is not eligible for Covered California and the subsidies. However, because the cost of the health insurance for the entire family, the employee, any spouse, and dependents, was 27% of the household income, that was deemed unaffordable, and spouse and dependents could go to Covered California and get the subsidy. Now, it's not always going to be that easy, and there are some other considerations. Once you go into Covered California, you are within the rules of Covered California. So, for instance, if the household income is below a certain threshold, all the dependent children 18 years old and younger would be considered Medi-Cal, and that's no cost. So if there are some children that are seeing doctors, being treated, and they really need to keep that private plan, it might be better to keep those children on the group plan as opposed to going into Covered California and Medi-Cal. But those are things that you'll have to kind of go through and look at and see how everything may fall out before you pull the trigger. I would say, work with an agent, work with someone who understands these health insurance rates. It's kind of complicated. However, the benefits can be enormous for the family. So instead of, people $1,000 a month for insurance with the subsidies, it may come down drastically, and that can be a huge, enormous help to the family budget. So if you have any questions, comments, You may leave them down below and I will do my best to answer them or point you in the direction where you can get the information. So for Insure Me Kevin, I am Kevin Knaus.